stop scrolling right now. If you are receiving a Centrelink pension or planning to apply for one soon, what I am about to tell you could directly affect the money that lands in your bank account every fortnight, because a major update has just been released and millions of Australians have no idea it has happened. So whether you are on the age pension, the disability support pension, or the carer payment, this new update could mean more money in your pocket or a reduction you were not expecting. So stay with me, because in the next few minutes, I am going to break down everything you need to know in simple, plain language. Welcome back to Centrelink Pension Guide, the channel dedicated to helping everyday Australians understand their pension rights, payments, and entitlements without the confusing government jargon. And if you are new here, make sure you hit that subscribe button and ring the notification bell so you never miss an important update like this one. And if you have a friend or family member on a Centrelink payment, do them a favor and share this video right now, because it could genuinely make a financial difference in their lives. In this video, I am going to cover exactly what this big update is, who it affects, how much your payment could change, what action you may need to take, and some important tips to make sure you do not miss out on a single dollar you are entitled to. So what exactly is this big Centrelink pension update? Services Australia has announced changes that affect pension payment rates, income and assets test thresholds, and eligibility rules. And these changes happen periodically, usually in March and September, tied to movements in the Consumer Price Index and changes in average weekly earnings across Australia, which means in real terms that the base rate of the age pension has been adjusted for both single people and couples. And I always encourage you to double-check exact dollar figures directly on the Services Australia website or by calling Centrelink, because rates update regularly, and you want the most current figure that applies to your specific situation. But here's the important thing to understand. This is not just about the base rate, because the income test and the assets test thresholds have also shifted, meaning some people who were previously over the threshold and getting nothing or getting a reduced payment may now qualify for a payment or see their payment increase. So do not assume anything and keep listening. Now, who does this update affect? The short answer is a very large number of Australians, starting with age pension recipients who should have their payment automatically adjusted, but who must make sure their income and assets information on file with Centrelink is current and accurate. Because if your circumstances have changed and you have not reported that you could be underpaid or overpaid, and overpayments create debts that nobody wants. And then there are people who recently had their pension rejected or reduced because with the thresholds adjusted upward, some people who applied before and were told they did not qualify may now be eligible. So if you were knocked back in the past, it is absolutely worth checking your eligibility again right now. Disability support pension and carer payment recipients are also affected because these payments are indexed and follow similar adjustment patterns. And partners and dependents should also pay attention, because the way combined income and assets are assessed may now work in your favor due to the new thresholds. Let me quickly explain the income and assets tests in simple terms, because confusion costs money. The income test looks at how much money you earn each fortnight from wages, investments, rent, and superannuation drawdowns, and there is a threshold below which your pension is not reduced at all. While above that threshold, for every dollar you earn over the limit, your pension reduces by 50 cents if you are single. And the assets test looks at the total value of things you own, including savings, investments, vehicles, and real estate that is not your home, with your family home not counted. And the key thing to understand is that both tests apply, and whichever test results in the lower payment is the one Centrelink uses. And with the new update, both thresholds have been adjusted upward, which means more of your income and assets may now be ignored when calculating your pension. So what action should you take right now? Number 1, log in to your MyGov account and check your current payment details. Number 2, update your income and assets details, because if anything has changed in recent months, you must report it to protect yourself from debts. Number 3, use the free payment estimator tool on the Services Australia website to understand your position under the new thresholds. Number 4, if you were previously rejected, apply again, or request a review, because thresholds change and so does your eligibility. Number 5, Seek free financial advice through the Financial Information Service, which Centrelink offers at no cost. Through qualified financial officers you can book via MyGov or by calling Centrelink directly. Before I wrap up, let me quickly cover some common mistakes. Do not assume your payment will automatically go up just because of indexation. Always verify your details on file. Do not fail to report changes like selling an asset, inheriting money, or starting casual work, because Centrelink debts can follow you for years. Do not give up after a rejection because rules and circumstances change. Do not rely only on what friends and family tell you, because your situation is unique and you should always get information directly from Services Australia or a qualified advisor. And do not overlook the work bonus scheme, which allows age pension recipients who do part-time work to earn a certain amount before it affects their pension, with a work bonus balance that can accumulate under recent policy settings. Many pensioners do not know this, and they lose out. All right, that is a wrap on this update, and I really hope this video has given you the clarity and confidence you need to check your entitlements, ask the right questions, and make sure you are getting every single dollar you deserve. So remember, the pension system is there to support you, and you should not leave money on the table simply because you did not know about a change. So take 5 minutes today to log into MyGov, review your details, and confirm your payment rate under the new figures. And if you found this video helpful, please give it a thumbs up because it really does help more people find this channel. And if you have a question about your specific situation, drop it in the comments below because I read every single comment and do my best to help. And if you are not already subscribed to Centrelink Pension Guide, now is a great time to do that because we cover everything you need to know about Centrelink payments, pension eligibility, how to appeal decisions, and much more. All in plain English and all completely free. So until next time, take care of yourself and take care of your entitlements. I will see you in the next video. Bye for now.